Let me start with a question. What happens when money stops meaning anything? Not just a drop in value, not just prices creeping up, a total collapse. Can you imagine working your whole life, saving what you can, only for every coin and bill you've ever earned to become worthless, almost overnight? In moments like these, the entire idea of wealth, security, and trust This is a story of how the German Mark, a symbol of strength, became a curse, driving families to hunger, democracies toward ruin, and reshaping the world's understanding of money. If you think hyperinflation is just a statistic, let us see if your mind changes when we follow the trail that destroyed Europe's richest nation from the inside out. The precarious birth of Weimar Germany. Germany at the end of World War I is a defeated empire. The Kaiser abdicates. Soldiers mutiny. Cities riot. Out of the ashes comes Weimar Germany, a fledgling democracy born with immense hope and impossible burdens. The peace treaty at Versailles delivered not only humiliation, but staggering financial penalties. 132 billion gold marks in reparations, demanded by victorious Entente powers. The nation's industrial heartland, the Ruhr, is crippled by occupation. Add to this, political instability, revolutionaries on the left and right, widespread unemployment, and a public desperate for normalcy. But here's the twist. Germany's government tries to hold the center by using its greatest economic weapon. The Reichsbank, the central bank, becomes the engine of new beginnings and new disasters. Printing marks to cover debts, pay public employees, and soothe unrest. Most Germans still believe that hard work and thrift will carry their families through. They don't yet see the storm on the horizon. But every policy, every decision, not just by politicians but by ordinary people, feeds the coming catastrophe. Origins: the seeds of crisis. Before World War I, Germany's monetary system is founded on gold and trust. The mark is steady, backed by real assets. The war changes everything. The government suspends the gold standard to pay for conflict, issuing massive war bonds, Kriegsanleihen, and quietly eroding the currency's backing. By 1918, Germany has poured over 160 billion marks into war expenses. Inflation begins trickling through the economy. Still, the mark looks solid until the war ends. Reparations, debt, and the cost of rebuilding fall on a nation with an empty treasury. Here's where the trick begins. Rather than raise taxes or slash spending, the government leans into the printing press. Marks are created out of thin air ostensibly to repay foreign powers, support millions of unemployed veterans, and power a new welfare state. The rate of inflation grows, but most people ignore the danger. The mark weakens slowly, until finally, it doesn't. The rise, printing presses roar. 1921. The world asked Germany for reparation payments in foreign currency or gold. The government, now pressed from every side, pays by buying foreign currency, using marks it prints with abandon. Each new bill weakens the mark further, forcing it to buy even more marks to meet obligations. It's a death spiral. Prices begin to climb. At first, it's a slow boil: monthly rises, then weekly, then daily. Workers demand higher wages, pushing up costs further. The government obliges, printing more notes. Investors and ordinary citizens begin trading marks for foreign currency as quickly as possible, accelerating the mark's destruction. 1923. Crisis explodes when French and Belgian troops invade the Ruhr to force Germany's hand on reparations, seizing coal mines and factories. German workers go on strike in passive resistance. The government pays their wages by printing marks, but the economy is producing almost nothing. With goods vanishing, more money means less value. Shops now change prices by the hour. Wages are paid twice daily so workers can race to spend their cash before it loses more value. Savings evaporate. Businesses shut their doors. Entire fortunes, life savings, pensions, insurance policies disappear in weeks. The breaking point: when money dies. By November 1923, $1 now equals 4,210,500,000,000 marks. People haul entire wheelbarrows of cash to buy bread. Some notes are overprinted with new denominations by hand, rather than manufactured, because even printers can't keep pace. Banks collapse. Entire social classes, pensioners, teachers, civil servants, are thrown into poverty. Black markets flourish. The idea of the mark loses all meaning. Barter returns. Food for fuel, shoes for coal, anything to survive. In Berlin and Hamburg, city dwellers trade their possessions for potatoes and eggs from farmers. Children play with stacks of bills, making paper kites they're worth nothing. In the chaos, crime surges, extremist politics, fascists, communists, and demagogues find fertile ground in desperation. Fear, rage, and blame spread. Democracy hangs by a thread. Trust in government evaporates fallout after the collapse. With the German state teetering on the edge, officials scramble for solutions. Enter the Rentenmark, a new currency backed not by gold but by land and industrial assets. The printing stops. Tight monetary controls freeze inflation overnight. The Rentenmark restores faith, but at tremendous cost. Debtors rejoice, loans are wiped away by currency reforms. Savers are devastated, decades of thrift erased in an instant. Investments, contracts, and wages dissolved into history. The social contract fractures. Entire generations, traumatized by their loss, become fiercely resistant to future inflation. This legacy shapes Germany's fiscal policy for a century. Failed fixes, unlearning the wrong lessons. Governments, desperate to ease pain, try every trick: price controls, rationing, wage freezes. They fail. The only genuine fix proves to be strict discipline and a hard reset of the currency. But the wounds remain. Distrust of monetary authorities lingers for decades, not only in Germany. Modern parallels. Inflation's shadow today. Fast forward to now. Is hyperinflation just a ghost story? Or a warning? Zimbabwe 2000s and Venezuela 2010s both print money to cover debts, experiencing inflation rates of 79.6 billion% and 10 million% respectively. Banknotes become playthings, and citizens scramble for basics. Amid global crises, financial collapses, pandemic responses, central banks worldwide print trillions. Inflation in developed countries, while far less dramatic, still sparks fear. Many ask, have we learned the right lessons? Are governments again tempted by shortcuts? Repeating patterns? Leaders minimize inflation risks for short-term political convenience. Ordinary people trust that systems will last, until panic sets in. Currency instability breeds conspiracy, fear, and populist movements. Physical money may be less common, but the mechanisms remain unchanged. Shocking data for today. In 2022, U.S. consumer prices rose over 9% in some months, the highest since the 1970s. Global debt now exceeds $300 trillion, more than 3 times world GDP since 2020. Central banks created unprecedented liquidity to fight economic downturn. What could make these sparks catch fire? Any crisis, any lost trust, any break in production. The specter of hyperinflation is distant but never gone. 3 clear takeaways. Currency is built on trust. When government breaks that trust, collapse is only a matter of time. The printing press seems like an easy fix, but its consequences hit the most vulnerable hardest. History may not repeat, but it rhymes. Every major inflation crisis started with people saying, "It can't happen here." A warning, an open question. Are you watching for the signals? Or are you trusting the system will always hold? The reality is, money means only what we agree it means. When that agreement cracks, the fabric of societies unravels. In every era, ordinary people are left picking up the pieces. If this story opened your eyes to how fragile financial stability really is, hit subscribe. History has the answers. I'll show you where to look next. Thank you for listening. Questions, comments, or your own family's history, leave them below. We're here to learn, not just to remember.